The Midcap Index opens well in the green. And in fact, that's opened with a gain of close to around 40 points.
Nifty quickly recover from the opening lows and the buyers come in.
It's not like we got a crazy handover or anything, but this has just been a one-way move that we've seen ever since then.
Today it has been, completely a bullish kind of hold on the market is what we have.
And a close that got a little wobbly, you'd have to say. That sudden decline that came in started with the bank Nifty.
Hello and welcome to Markets Today. I'm Ekta Batra and here are the headlines for this evening. The Sensex gains over 300 points and the Nifty gains nearly 100 points despite a late sell-off. The mid-cap and the small-cap indices hit record highs in intraday trade. RBI asks Bajaj Finance to immediately cease sanctions and disbursements under two lending products for non-compliance with digital guidelines. Analysts see the period of resolution as key to assessing the impact of the move. ONGC expects oil and gas from KG Basin to start flowing within 6 odd months. This is even as it explores investing 1 lakh crore in 2 petrochemical joint ventures by 2028-2030 and will stay upbeat on the stock. Crude slips after US output scales to a high and US inventories swell. A dip in Chinese refining only adds to the mix, with IEA now suggesting the market is not as tight as perceived earlier. Sebi chairperson Madhvi Puri-Buch says the consultation paper on voluntary delisting framework will be on the agenda for the next board meeting. Adds the industry standards forum could be included in the regulatory framework to facilitate implementation. All right, those were the top stories. Let's tell you what we have lined up for you in the next 30 odd minutes. In market opinion, we have Hiren Ved of Alchemy Capital Management. In big voices, we have Madhvi Puri-Buch, who's the chairperson of Sebi. All right, on to the first headline this evening and the day's market action. The Sensex gained over 300 points and the Nifty gained over 80 odd points despite a late sell-off. The gains were led by IT, auto, real estate stocks. Bank stocks underperformed in trade. The mid-cap and the small-cap index hit record highs in intraday trade. Prashant is here with details.
Well, strong gains coming in through today and would have been stronger had it not been for the last 35-40-minute wobble that we saw and that pullback which came through. There were reports of some market at close selling, a basket sell order which came through, which took the market lower. Maybe it's just pullbacks, right? Because the market's done 250 points yesterday, another 200 points today. That would have been too much, even though global markets have been strong. In any case, I'll come back to levels, etc. in just a bit. So the Nifty ending with a very respectable score by the end of the day. Bank Nifty looking a little more weaker. It's been the weaker of the two indices for a while now. It ended in the red. And that was where the bulk of the sharp correction came through. Mid and small cap indices, no problems, new highs every day. And of course, the Midcap Index joined that along with a small cap index today. IT services index 5% and counting this week. That's turning out to be the sector of the week. So let me begin there with Nifty gainers. TechM, HCL Tech, Infosys, TCS, LTI, Mindtree, Wipro, 6 large Nifty names, all IT services which did well. Hero MotoCorp and Bajaj Finance were the other stocks which participated. In the broader market, long list of volume-led gainers. Walk hard out of the blue, big volumes, big move today price-wise. Manappuram, second day running. You had Coforge, which did well, not just large cap, but mid cap tech as well. CESE, there was KPIT, Sterlite Tech, Welspun Corp, the pipe maker, GICRE, Mapma India, KNR Construction, Dream Folks, Mama Earth, which is Honasa, ITT Cementation, Craftsman Auto is, of course, above 5,000 rupees now, KPI Green, VST Tillers, and many more. By the way, market breadth was, the gap narrowed between advances and declines, only about 100 stocks separating both. But the list of volume-led gainers much longer than what went down. Some pullbacks as well. Kalyan Jewellers has lost about 20% from its recent highs. Welspun Industries, Jyoti Laboratories, Jindal Saw, E-Clerks, ISMT, and La Opala were a few other names which lost some. It's back to tracking global markets because they've been supportive. It's a global turn. The bet is that the big hiking cycle is pretty much done, something we've alluded to. How will prices continue to respond to that change narrative? That is the question. Back to you.
All right, thanks Prashant for that. Let's get you some market opinion then. Hiren Ved of Alchemy Capital Management expects to see more consolidation, but also adds that the market is building the base for a new high soon. He also says that Q2 earnings were fantastic and the broader markets recorded a 40% growth.
may see a little bit more consolidation, but I think we are certainly building a base for new highs, maybe at the end of the year or early next year. Very difficult to call in the short run. We have to be mindful of the fact that sectors that have been doing well, a lot of the returns we are already discounting FY24, in many cases FY25, right? So from here on, you need to really have a 3-year view if you want to invest in small and mid caps. I think Q2 earnings season was fantastic, right? So you've seen roughly about a 1% upgrade on Nifty earnings. So Nifty earnings are stable, and the broader markets have delivered almost a 40% plus PAT growth. The festive season has gone pretty well. So third quarter earnings should also be reasonably decent, right?
All right, well, on to the second headline now. Shares of Bajaj Finance recovered in trade today. This is after brokerages said that the bank's financial impact after the Reserve Bank's order on not sanctioning loans under 2 lending products is limited. Abhishek Kothari joins in with the details. Abhishek, give us the key details and what the brokerages were making of the news.
Well, RBI has taken action against Bajaj Finance. They've asked Bajaj Finance to stop sanctions and disbursements of loans under 2 key lending products, that is Ecom and Insta EMI cards, with immediate effect. Now, action is against the non-adherence of the company to the extent of digital guidelines that was laid by RBI in 2022 with respect to non-issuance of key fact statements to borrowers. So, supervisory restrictions will be reviewed upon the rectification of the said deficiencies to the satisfaction of RBI. Now, this is the first time that RBI has issued action against like this under digital lending guideline. Bajaj Finance is a systematically important NBFC and they have a credit rating of AAA by CRISIL as well as ICRA. So details of the product is that the total EMI cards issued, that is card in force, is about 4.2 crore as of Q2 FY24, which is up nearly 22% YOY and about 10.3% quarter on quarter. In Q2, the EMI cards acquired grew by 30% YOY and about 5.7% quarter on quarter to about 130,000 cards in a quarter alone. Now, Bajaj Finance has given a reply on the exchanges as well. They say that there is no material financial impact on the company from the RBI action or directions. They will rectify on RBI's observation and comply with RBI direction at the earliest possible. We have a brokerage note from Macquarie coming in, who has an outperformance rating and a target price of 9,190 per share. They say that with RBI order, they will monitor the disbursements and AUM growth of Bajaj Finance going ahead. Bajaj Finance had added about 3.58 million customers in Q2 FY24. About 0.68 million EMI cards were acquired digitally, which comprised about 19% of total customers that they acquired in Q2 FY24. So EMI card franchise stood at close to 4.2 crores, while digitally sourced EMI card franchise stood at about 42 lakhs, which is around 10% of the outstanding EMI card base. They think that the numbers look on the higher side, and for this reason they are surprised by management comment on minimal operational impact. How long will RBI keep this ban needs to be seen. Earlier instances show that RBI kept the ban anywhere between 12 months to 18 months for it to be fully revoked. So since the press release already states that Bajaj Finance has started issuing KFS, they think that the ban would be less than 12 months. Back to you.
Okay, all right, Abhishek, thanks very much for that. On to the third headline today then. ONGC rallied 1.5% after it expects oil and gas to start flowing from the KG Basin in the next 6 months. This will increase oil production to 45,000 barrels from 10,000 barrels. Sonal Bhutra is here with the details on this story.
Thank you for that. Well, ONGC is in focus on the back of their conference call takeaways after the results that the company reported. Though the results are below estimates, their commentary on volumes has been positive. The company says they expect commencement of oil and gas production from KG Basin in coming months itself. The oil production should start in November itself, and gas production in the next year in the months of April and May. And this is the next leg of trigger for the stock as well, because volume growth has been subdued. They say this will increase oil production from 10,000 barrels to 45,000 barrels. and the gas production will be to the tune of 10 MMSCMD. This is in FY25. Additionally, ONGC is also exploring investment or capex to the tune of 1 lakh crore rupees. This is in 2 petchem projects. This will be done in the form of a joint venture, but by FY28, FY29 as well. However, they are still considering it, and this has not been finalized. New gas fields, according to the recent formula, it will attract 20% premium to gas sales, and they say that around 6 to 8% volumes every year will come in from new gas sales, and this is something which will add premium to their pricing as well. Motilal Oswal has reiterated a buy rating on the stock with an 18% potential upside. They have a target price of 235. Morgan Stanley has an overweight rating with a target price of 216. They say production growth after a decade of decline is something that would be the next trigger for the company. And management in the call highlighted that now it's largely de-risked, and going forward there could be positive volume growth coming in for the company.
Okay, all right, Sonal, stay with us. Oil and gas companies reported a strong performance in the second quarter. Brokerages were bullish on the sector. ICICI Securities said that better resilience was observed in volume and margins by most companies in the second half of the year. So take us through the key highlights.
Well, quarter two has been really strong for the entire oil and gas space, and there has been an increase in profits on a YY basis for sure. Let me start with the big boy Reliance Industries, where oil to chemicals business was strong. It saw a 36% increase in EBITDA. It was led by gasoline cracks going higher as well. Even the gas EBITDA rose 50% on a YY basis. It was because of higher pricing that the company took, 22% hike in prices on a YY basis. So good set for Reliance Industries in the oil and gas space. Oil marketing companies saw GRMs going up by 26% on a YY basis, 53% on a sequential basis. It was led by their good refining segment performance this time. And city gas distribution companies, it saw strong margins across the segments except for Gujarat Gas. Higher margins were because of lower APM gas prices, and higher volumes were due to price cuts. So basically, it was a good set across all the major companies in the oil and gas space. ONGC, however, disappointed this time, with EBITDA declining on a YY and on a quarter-on-quarter basis because of lower oil and gas production by the company. Quickly tabulating what the EBITDA looked like in this quarter, we had the oil marketing companies which saw a substantial increase in EBITDA on a YY basis. It was declining on a quarter-on-quarter basis. City gas distribution companies saw a higher number both on a YY and on a quarter-on-quarter basis. We had the gas transmission companies like GAIL and GSPL which saw good numbers, up 40% and 86% both on a quarter-on-quarter and on a YY basis. Gas utility like Petronet did well sequentially. We had Reliance that did well both YY and a quarter-on-quarter basis. ONGC, however, disappointed, as I said earlier, declining both on a sequential and on a YY basis. Now, ICICI Securities says that quarter two earnings universe for their oil and gas coverage was very strong, and FY24 prospects also appear stronger than earlier due to the beat versus estimates that were seen in quarter two as well. Better than expected resilience was seen in volumes and margins by most companies in the second half as well. That's where they've upgraded a lot of these stocks, barring Reliance Industries, Petronet and ONGC. So they continue to be bullish on the space because of better than expected earnings in the quarter two for the entire sector.
Okay, all right, Sonal, thanks very much for that. We need to take a short break. We'll be back with the other top stories. Welcome back. You're still tuned into Markets Today on CNBC-TV18. The fourth headline this evening, oil prices tumbled on a bigger than expected rise in US crude inventories and record production. This offset worries about a lackluster demand from China. Manisha Gupta is here with the details on this story.
Well, after a negative October, the month of November till time also is in the red for the crude oil prices, where we have seen almost all of the war premium go off and then some more. The pressure in the crude oil prices also comes in on the back of higher US production at a record 13.2 million barrels per day. And the US inventories in the 1 week also have gained up much more than what the street was anticipating at around 3.6 million barrels there. Apart from that, the China oil refinery numbers also have not come in so strong. We've seen easing into that one as well, while the Chinese retail and the manufacturing data has come in on the stronger side. So it clearly has been a mixed bag coming in from that country there. There also is an interesting statement from IEA saying that the oil markets are not as tight in this current quarter as was earlier perceived, because the non-OPEC oil continues to come into the market and the demand isn't really picking up. It also is about milder weather in the west, and that heating oil and the gasoline demand also have been slightly on the weaker side, and that continues to weigh on crude prices right now. Though the markets do believe that this is a price that markets could look at consolidation on. Not too much of a decline is what the street is anticipating, but $100 a barrel for this month as of now is clearly ruled out.
Okay, all right, Manisha, thanks very much. In stocks and news then, EMS reported what was a strong set of Q2 numbers. Revenue jumped 54%, profit after tax nearly zoomed by 68% on a yearly basis. Ashish Tomar, who's the founder and MD of the company, said that they hope to sustain the current growth rates. He also added that they aim to secure projects worth around 500 to 600 crores by the end of this financial year. Listen in.
We hope to continue the growth at the current rate, and the margins would remain somewhere around these plus minus 1 or 2%, nothing substantial. We have bid for a HAM project in Jharkhand that's worth around 500 crores, and I think in Bihar it was a project worth 150 crores, and in West Bengal we did bid for a project worth around 200 crores. Currently, our unexecuted work stands at around 1,800 odd crores, and till now we have secured projects worth around 600 crores in this financial year, and we are hopeful of securing projects 500-600 crores in that range by the end of this financial year.
Okay, all right. Well, let's get to a couple of other stocks. Moving on, Hero MotoCorp surged 3%. This is after recording what was its highest ever festive sales between Navratri as well as Bhai Dooj. Well, in fact, the company did say that they have recorded the highest ever festive sales. And if you look at it, they have surpassed their pre-COVID-19 festive sales. They recorded more than 14 lakh unit retail sales in this 32-day festive period. They surpassed the previous highest retail sales of 12.7 lakh units in the festive period of 2019. They have indicated the following. They saw robust demand across rural markets as well as steady retail offtake in key urban centers. They saw double-digit growth in central, north, south and east zones. Post-festive channel inventory is now down to the lowest level that they've seen in 3 years, and this has set the company on a steady growth path for the rest of the fiscal, says Hero MotoCorp. Well, on to a CNBC-TV18 exclusive then. Yuko Bank has said it has recovered nearly 80% of the amount that was erroneously transferred to its customers after a tech glitch. This according to sources who say the bank has clawed back 658 crores out of 820 crores that was wrongly credited due to what the bank has called an internal technical issue. Ritu Singh is here with the details.
Well, Ekta, has been one bizarre case, and Yuko Bank has now revealed details of the amount that was wrongly credited into accounts of Yuko Bank customers following a technical glitch in IMPS transactions. It turns out as much as 820 crores was erroneously transferred into accounts without the actual money being received from the remitter banks. Now, earlier this morning, Yuko Bank clarified that it had blocked the recipients' accounts and it has been able to retain and recover 649 crores out of the 820 crores of the amount, and the bank said it had initiated actions to recover the balance amount as well. Now, since this clarification was made to exchanges, we have been in touch with the bank and we understand another 9 crores was recovered since, taking the total recovery to 658 crores or a little over 80%. Now, we spoke to various officials in the bank to understand how the error occurred, and it turns out when customers from other banks sent money to Yuko Bank customers, a technical issue caused the bank system attempted to send a transaction failed message to the sender bank. This made the money go back to the senders, even though it had actually been correctly credited to the right recipient at Yuko. So the recipients got the money and the senders also got it back. Now, we understand there are about 6 or 7 other banks from which transfers were made to Yuko Bank customers. The bulk of the transactions, by the way, they took place on Diwali night and the night after. Now, while the bank did not explicitly say that this was a cyber attack, it merely said it was an internal tech issue. The bank has reported the matter to law enforcement agencies, and that we understand includes the Cybercrime Cell as well as the CBI.
Okay, all right, Ritu, thanks very much for that. So that's on Yuko Bank, but let's move on. Tata Technologies has set a price band for its upcoming initial public offering at 475 to 500 rupees. The public offer of the entity will be open for subscription from November 22nd to the 24th. This issue is the first from a Tata company in nearly 2 decades after TCS MD, Director and CEO Warren Harris told CNBC-TV18 Prashant Nair that the company has been a part of the electrification journey for more than a decade.
We began the electrification journey some 10 years ago. Shortly after Mr. Tata launched the Tata Nano, he challenged us to come up with an electric vehicle concept that was as frugal in terms of pricing as the Tata Nano, and he gave us an MSRP target of $20,000. We put together a concept that we revealed at the International Automotive Show in Detroit in 2012. And incidentally, that was the same show that Elon Musk revealed the Model S. Wow. So we've been part of the electrification journey right since the onset.
Okay, well, on to the 5th headline today. Sebi chairperson Madhvi Puri-Buch said that the Sebi consultation paper on voluntary delisting framework will be on the agenda during the next board meeting. Speaking at FICCI's Capital Markets Forum, she also added that the Industry Standards Forum could be included in the regulatory framework to facilitate implementation. She promised that all new Sebi rules will be backed by data.
And now we are going to our board for approval because we have processed all the feedback. So making delisting easier, more convenient. You know, Sebi has repeatedly said कि हमें अभिमन्यु पसंद नहीं है. तो ऐसा नहीं होना चाहिए कि जो एक बार एक कंपनी हमारी मार्केट में आ गई तो वो अटक गई, उसको बाहर निकलने का रास्ता नहीं दिखता है. So, which is why we are taking this proposal to our board for bringing flexibility in voluntary delisting.
There is no better way for the market to progress and for the regulator to do its job than to work with the industry in a spirit of partnership, and which is what is embodied not just in our advisory committees, of which we have a very rich history. Right from inception, we've had a very rich history of our advisory committees for regulation formation, but now with the Industry Standards Forum for regulation implementation and standards, we do not and will not bring regulation into the market that is not backed by data. That was our commitment to you. And as I said, this is the progress that we have.
Okay, all right. On that note, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.